Good afternoon or good morning, depending what time zone you are in. Welcome to today's Ominar. Today we are going to cover the Main Street Lending Program or Funding Forward, and specifically cover a lot of the new information that came out from the Federal Reserve and the Treasury Department last week. Please post your questions in the Q&A only. It'll be difficult for the moderator to look for questions in the chat and the Q&A. The recording of this webinar and slides will be posted shortly on our community site at realtime.inc.com, and later in the day we will also email a copy to participants. A little bit about myself. I'm Ami Kassar, the founder and CEO of MultiFunding. I am an Inc. columnist. I have advised prior administrations on the business credit markets as well as the Federal Reserve. I have a book out called The Growth Dilemma. And for my EO friends out there, I'm a proud member of EO Philadelphia. My lawyers asked me to share some disclaimers with you. We are in unprecedented time in history, and the information available to us is changing rapidly. Please refer to our most current presentation for education. The information provided is based upon our best judgment about what we know at this time. However, key questions remain about how to implement this program. MultiFunding LLC does not accept any liability as it relates to the timeliness or content of the information we are sharing today or may share in the future, and we are under no legal duty to update any such information or recommendations. We encourage you to check in with your attorneys, CPAs, and financial advisors for additional insights. Take a minute before we dig into the financials and think about what is next for your business. Have you taken the time to reimagine the future? This process involves, this is the time we must be preparing for battle. And any battle plan needs a strategy. Are you planning a 5% pivot, a 50% pivot, or a 90% pivot? Everyone's situation is a little different. What will your team look like going forward? Who will your key players be? And how much ammunition are you going into this battle with, both to prepare for offensive and defensive situations? And ammunition equals cash. How much cash will be required to get your business back on a stable footing? What is the best case and worst case scenario? Where will the cash come from? How much are you willing to personally risk? And what does your future look like? What opportunities will present themselves, and how will you take them? In this vein, I want to talk to you about the late Main Street Lending Program, which is fully expected to launch over the next few days and definitely this week. It is a program under the CARES Act that has $600 billion allocated for it. It will be in effect until September 30th, 2020, and it is comprised of 3 lending facilities, a new, a priority, and an expanded. You will go get one of these through a participating bank, savings association, or credit union. I just want to be clear that unlike PPP, where every bank and almost credit union on every street corner did these, we don't expect maybe more than 200 or 300 lenders to participate in this program. To be eligible, you must be established prior to March 13th, 2020. If you have business or its affiliates have more than 15,000 employees or $5 billion in revenue, you are ineligible, and you must be created or organized in the United States or under the laws of the United States with significant operations and a majority of your employees based in the United States. The new guidance does provide some additional classification around the U.S. eligibility test. In order for an eligible borrower to have significant operations in the U.S., it would consolidate with its subsidiaries. It must be the greater of 50% of the eligible borrower's assets, annual net income, or annual net operating revenues are generated in the United States, or annual consolidated operating expenses are generated in the United States. Subsidiaries or foreign companies can apply as long as the money and resources go to the U.S. companies and not up to the parent. Eligible businesses to participate are for-profit entities, partnerships, LLCs, corporations, associations, trusts, cooperatives, a joint venture with no more than 49% participation by foreign business entities or a tribal business concern. Ineligible borrowers include developers, landlords, and some specific other categories. Affiliation rules apply. If you are part of an affiliated group of companies, you can only participate in one Main Street facility. You can do the new, the priority, or the expanded, but you cannot do a combination of them. And the affiliated group's loan cannot exceed the maximum loan amount for that facility. And an eligible borrower's maximum loan size will be limited by its own leverage level, the leverage level of the affiliated group on a consolidated basis, and the size of any loan extended to other affiliates in the group. Now let's talk about the facilities. First two, and we think the most common ones, will be the new and the priority. The new and the priority share some attributes. They are secured or unsecured, depending on the lender. They have a 4-year maturity. Principal and interest payments are deferred for 1 year. The unpaid interest will be capitalized. They are priced at an adjustable rate of LIBOR on the 1 or 3-month index plus 300 basis points. The minimum loan size is $500K and the maximum loan size is $25 million. Prepayment is permitted without penalty, and there are origination fees of between 1% and 2%. Let's dig into the new facility first. And these loans are at a minimum of $500,000 and a maximum of $25 million. How do you calculate what you're eligible for? They're based on a multiple of 4 times your 2019 EBITDA, minus your existing drawn and undrawn debt. So to take an example, in row 3, this company had $500,000 of EBITDA, so the maximum they could get would be $2 million. However, if they had eligible debt of $1.5 million, their potential new money loan would be $500,000. The same company in row 1, if they had $500,000 worth of existing debt, their potential new money loan would be $1.5 million. These loans are repaid on the following amortization schedule. While interest accrues during year 1, there are no payments due. Then in year 2, you pay interest monthly, and at the end of year 2, you pay a third down, and you follow that pattern in year 3 and year 4. The lenders, if you have existing lenders, they have to share the rights with other lenders in case of bankruptcy. But in the normal course of business, the new lender's rights can be subordinated. And this explains some clarification whether or not the Main Street your new lender would take a loan, lien. It really depends on whether there's an outstanding secured loan, and this is how they must choose it. The borrower can take new secured or unsecured debt after receiving an MSNLF loan, provided that the new debt would not have higher contractual priority in bankruptcy with the MSNLF loan. Now let's talk about the priority facility. These are also between $500 and $25 million. They are calculated a little bit differently. Also they are based on an EBITDA ratio of 6x instead of 4x, which would mean that you could get more money. So let's take an example of that same company in row number 3. They were applying for a priority loan facility. They could get $3 million. And if they had existing debt of $1.5 million, they could get a potential new money loan of $1.5 million. That same company in row 1, if they had $500,000 worth of existing debt, their potential new money would be $2.5 million. These loans amortize a little bit differently. Same as in year 1, there is no payments, so the interest accrues. In year 2, monthly interest payments start, and at the end of year 2, you pay 15%. At the end of year 3, you pay 15%. And at the end of year 4, there's a balloon of 70%. The big key difference and clarification that came out on the priority loan is that eligible borrowers may, at the time of origination of the loan, refinancing existing debt from other lenders into your Main Street priority loan facility. So if it makes sense and you have other loans, you can refinance them into this facility. Priority loans, unlike the new loans, lenders must have senior or on par rights with all other lenders except for your mortgage. And the secured versus the unsecured. If you have other loans, the Main Street Priority Loan Facility must be secured. If you don't, it's up to the lender's discretion if it will be secured or unsecured. And as a very baseline scenario, a company with $83,000 of 2019 EBITDA and no debt could borrow $500,000. The expanded facility amounts are different. They are between $10 and $200 million. And to save you some brain space, if you don't have existing debt of $28.5 million, you don't have to worry about this facility. These are calculated at 35% of your existing debt. So to take row number 4, a company with $10 million of 2019 EBITDA and existing debt of $1 million, they could get a potential loan of $35 million, which does not exceed 6 times their EBITDA. These really are priced a little bit differently, primarily in that the origination points are between 75 and 150 bips, and the minimum loan size is $10 million, and they tag along to the rights of the established loan facility. Now, what are your borrower certification and covenants when you agree to take one of these loans? You commit to refrain from repaying any existing principal balance or on any existing loans, and you commit to not shut down or cancel any committed lines of credit. And you certify that you have reasonable basis to believe that you can meet your financial obligations for at least 90 days and do not expect to file for bankruptcy during this time period. There are some things you can do. You can repay a line of credit, including a credit card, in accordance with your eligible normal course of business usage of such a line of credit. You can take on and pay additional debt obligations required in the normal course of business and on standard terms, including inventory and equipment financing, providing that the debt does not go in senior position to your Main Street Priority Loan Facility, and you can refinance maturing debt during the time. In all of the programs, the new, the priority, and the expanded, you agree not to make certain compensation, stock purchase, and capital distribution restrictions. There are some carve-outs for S corporations or other tax pass-through entities that you may make distributions to the extent reasonably required to cover tax obligations. So while you have the loan and for 12 months after, you agree not to pay dividends or make other capital distributions with respect to the common stock of your business. For those who earned between $425,000 and $3 million in 2019 in total compensation, you agree to not earn more of that while you have the loan and for 1 year after. If you earned, or one individual or officer earned more than $3 million, what you take is you take half, say they earn $6 million, you take half the difference between 3 and 6, which is $1.5 million you added to the 3, and you get a total compensation of $4.5 million. You agree while you have the loan to make reasonable efforts to retain your employees. However, I want to be clear that unlike the PPP, where the primary focus is retaining employees, here the priority focus is saving companies, and there's less stringent requirements on retaining employees. How will your EBITDA be calculated? What the lender will do, if it is a lender you've worked with previously, they will be required to calculate your EBITDA the way that they exactly have previously. If you're a new lender to a new borrower to a lender, they will have to find a baseline case of a similar company to yours and how they've previously done EBITDA for that company and calculated it accordingly. Your debt will include all existing outstanding and undrawn available debt on the date of your application, including unsecured or secured loans from any bank, non-bank financial institution, or private lender. The existing outstanding and undrawn available debt should be calculated at the date of your loan application. This includes, just to be clear, for those who have an asset-based line secured by accounts receivable and inventory, that is the amount that you borrowed that day, not the amount that you could borrow. How do you pick between the new, the priority, or the expanded? Well, everyone's situation is a little bit different. Let's take row number one, a company with $2 million of EBITDA and existing debt of $5 million. They could pick a new facility of 3, a priority facility of 7, or an expanded facility of 0. How do you think about all this? Well, financing strategy is about offense and defense. Let me share with you quickly 3 case studies how some clients of ours are planning on using the Main Street program. One is a company with a $3 million line of credit that currently has $1 million drawn against it. The line of credit has a personal guarantee. They are planning on getting an MSLP for liquidity, and they would rather not personal guarantee the capital required to reestablish the business. Another is a professional services firm whose partners expect that they will have to reduce their draws by at least 50% in 2020 to recover from COVID-19. They plan to take an MSLP to spread their income hit over 4 years instead of 1. And another one is a company that is already being approached by several competitors who plan to close shop as a result of COVID-19. They plan to acquire companies at pennies on their dollar and use the MSLP money to help. So, how much cash will be required to get your business back on a stable footing? What is the best case and worst case scenario? And where will the cash come from, and how much are you willing to personally risk? And what does the future look like? What opportunities are you considering? And is the Main Street Lending Program a good program for you? Now that we've wrapped that up, I do want to let you know that if you would like our help, we are offering packages to help clients through this program at MultiFunding, and you can certainly reach out. But at this time, I'd like to open up the floor to the moderator, Hannah, who will be happy to take your questions. We're going to take any questions about Main Street first, and then if anyone has questions about PPP or EIDL, we'll be happy to take them out after if there's time. Thank you, everybody.
Do you expect the Federal Reserve to extend the terms of the loan beyond the 4 years at some point, given market feedback?
I don't think so. This is intended to be a bridge facility, and it's not intended to be a long-term loan facility. The intent, I believe, is that should things go well, most borrowers will either pay it off in the time allotted or refinance them.
How do we determine which loan, main versus priority, we're eligible for, and how do we apply for these loans?
Determined based on your EBITDA in 2019 and how much debt you have to see where you fit in. And you apply for these loans by trying to find a participating lender who's doing that.
Given that fewer lenders will be participating in this program other than PPP, how does the company identify those lenders who are participating in MSLP?
It'll be a little bit of hit and miss. You'll certainly have to dial around and see, or if you want to help at MultiFunding, we are compiling a list for our clients who will be participating.
Does the PPP money we receive count as debt or loan against the MSLP program?
It does count in your debt ratios, we believe, unless it is forgiven before you apply for the loan, but it's likely that the forgiveness process is going to take a long time, so that's not a likely scenario. Just a quick favor for those who are putting their questions in the chat box. It would help the moderator a lot if you can put them in the Q&A. It just gives her one place to look instead of bouncing back and forth between two. Thank you.
If our 2019 EBITDA was negative, could we still qualify for the minimum loan of $500K?
Absolutely not.
Can I have both an EIDL and a loan from the new facility?
That is an interesting question and one that hasn't been factored yet. But if you took an EIDL loan, not a grant, you accepted some pretty stringent loan terms, and it's not clear to me if in those loan terms they would allow to the same concessions to the government in case of bankruptcy. So the long and short of it is I'm not sure. You could do a priority and refinance the EIDL into the priority, but I'm not sure that you will be able to get a new and have an EIDL. That's to be determined.
What is the main difference between the two facilities?
Assuming you're talking about the new and the priority, the main difference is the amount you can borrow and the amortization schedule. On the new, you pay back a third, a third, a third at the end of year 2, year 3, and year 4. And on the priority, you pay back 15%, 15%, and 70%.
Is there a personal guarantee in any situation?
The program does not require the bank to take a personal guarantee. There's no mention anywhere of a personal guarantee in any of the documentation about the program. That doesn't mean that some banks won't try to take personal guarantees, and whether or not they can do that or not will largely depend on how competitive the program becomes.
When you say except for mortgage, does that mean the loan is not secured against my property?
Correct.
Can you explain?
I'm sorry, but to be clear, that doesn't mean that the debt on your property is not included in your leverage calculations for how much debt that you have.
Can you explain in a little more detail the lender's rights work on MSLP?
Lenders have different rights, whether it is a secured or unsecured loan, and what their rights are compared to your other lenders. Keep in mind that the lender on the new facility is going to sell 95% of your loan to the Federal Reserve, and on your preferred facility is going to sell 85% of it to the Federal Reserve. But a lot of the lender's rights really are dependent whether or not the loan is secured or unsecured, and what rights they have in comparison to other lenders that you have.
Are 2019 tax returns needed for MSLP?
Not needed, but certainly advantageous and make an application stronger, either to have them done or to have some kind of reviewed or audited or compiled financials by your accountant for 2019 will make it easier.
I have 2 merchant advances to be repaid in 3 months and an SBA line of credit outstanding. Should I pay these off in full so there's no question about the loan seniority when I apply for MSLP?
I think that depends on what facility you're applying for and how sure you are that you're going to get it. So you shouldn't rush to pay off any loans unless you are highly confident of the outcome before you do it. So you could do that and then go to the bank the next day to apply, and the bank says, sorry, you're out. Well, then you're going to be pretty upset.
Are we eligible for MSLP if we did in fact receive the SBA disaster loan and a PPP?
You're not eligible if you received it, but it doesn't suddenly make you eligible. That depends on how much debt you have and what your EBITDA was and how you fit within the ratios.
When are we likely to be able to file for this loan?
Applications should be available this week, and banks are busy getting themselves in order. We, in fact, already have term sheets out for some of our clients on the loan, even though it's not officially open yet.
How much interest do you expect in these programs?
It's hard to tell.
And if you take an EIDL loan, will it negatively impact the underwriting for the MSLP?
Again, the trick about the EIDL is what the government will do on the rights of an EIDL loan if you're taking a new Main Street loan facility. If you're going to try to take the priority one, they might force you to refinance the EIDL, and that will depend on if that makes sense for you, depending on the size of the Main Street facility as comparison to the EIDL.
Who is verifying the EBITDA calculations? Wasn't there something about various calculation methods?
It will be up to the bank to determine the EBITDA calculation that makes most sense for them. And what they'll have to do, if they've worked with you before, they will have to use the EBITDA that they've historically done with you. And if they haven't worked with you before, They will have to find the most conservative example of a company that is similar to yours and use that EBITDA calculation in determining what you may or may not be able to get.
How does a lender decide if you are suited for new or priority loan?
It's a discussion about how much leverage you need, how much comfortable they're willing to give you, and what your lender's rights are for your existing rights. So I don't know if I've made this clear enough, but this is a much more complex process and a much more traditional underwriting and dialogue back and forth and negotiation back and forth with the lender than the PPP. PPP is, which is kind of everyone's frame of reference now, or almost became like an entitlement. This program is not an entitlement. Banks are going to take you through the rigor of the regular and full underwriting to determine if it makes sense for them and makes sense for you.
Will credit be an issue to qualify?
It's a consideration the bank has the right to consider, sure.
I have a line of credit with my existing bank. Can I get the MSLP through a different bank?
You can, but how that will work and whether that bank will want to refinance your line of credit will depend on what rights your existing lender is willing or not willing to give up to the MSLP lender. So it's not a black and white yes or no answer. It really is dependent upon the situation.
Is there a rush to apply for these loans, or could we wait a few months for business to stabilize before applying?
It all depends how quickly the $600 billion will run out, and I don't have a crystal ball.
Any restrictions on ownership profiles of borrowers, like U.S. citizens, etc.?
No, not that I've seen.
For a profitable business in 2019, how hard do you expect these loans are to receive?
Profitable is great, but that's just one piece of the equation. How solid are your financials? Are your tax returns done? What are your forecasts and your projections going forward? What do you want to use the money for? How much other debt do you have? It's not one variable that goes into these things.
Many questions on when is the program going to be available and which banks will be taking the applications.
We expect the program to be live by the Federal Reserve this week. Banks will bring it up at their own speed. They're busy thinking through their plans and waiting for the final rulings and reading a lot of the rulings that came out last Wednesday or Thursday. I think it was Thursday. And so, and then each bank will decide to jump in at their own speed and at their own rhythm.
Where can you get the application forms for these new loans, MSLP?
Each bank will likely have its own application form. It won't be one centralized application form. And while the application form is important, there's a significant amount of historical financial data that needs to, and projections and forecasts that need to be shared with these applications. It's not just filling out a piece of paper.
Is debt calculated on all affiliate companies as well if we use only one company out of the four?
We are 99.9% sure that is the case.
Will finance companies qualify if the capital is being utilized for the management and service entity, meaning none of the capital will be used for lending?
It's possible, but we'd have to check that.
Can you clarify about the priority loan? What is the difference between this and the standard loan, for example, the 4 times or 6 times EBITDA?
The difference is how much money you can get. You can get more by the priority. And the difference is the rights that the lender will require vis-a-vis your other lenders. So if you really have no other debt, you might as well try to get the priority. The payment terms are more advantageous to you and you can get more money. If you have other debt that doesn't make sense to refinance, then it's a discussion between between those lenders and you to determine what rights they may or may not be willing to give up.
How does a company demonstrate eligibility based on need and no other reasonable access to capital?
I just want to be clear by that question that if you are applying for this because of need and you are scared for your survival, you're probably going to have to apply at your existing lender. It's going to be quite difficult to get a new lender to make one of these loans to a company that is struggling or its future is not clear. If you're in that category, it probably makes sense to go to your existing bank, especially if you have debt with them. If, to the contrast, you are a situation where the company is doing fine or okay or stable and expects to stabilize quickly and grow, then that's a different story, and you can likely go to a broader array of lenders.
Can the EBITDA number include capitalized R&D costs?
That will depend on the bank, and if the bank has worked with you before historically, how they've looked at that, and if it's not you, how they've looked at comparable companies to you.
What is the definition of an affiliate for loans under this program?
It is the typical affiliation by the standard SBA rules, which is controlling interests.
Has there been any indication of how long seniority would be negotiated with other lenders? For example, if Chase refused to give seniority over an outstanding line of credit, would that preclude using another bank?
Wouldn't preclude it, but you'd have to refinance Chase's line of credit with the new bank.
How long will it take to be offered the loan after the application?
That will really depend upon the lender and how complicated your application is and how complete it is when you submit it to them.
We already have an ABL facility to finance our loans, but need a loan to help the management service entity. It's asking about new guidance. Sorry, that is an incomplete question. I apologize, Ami.
No problem.
We are a subsidiary of a foreign company. Could you explain in greater detail what the restrictions or rules are for us?
It seems that you would be eligible, but there would be rules that would prohibit you from sending any of your money up to the parent company in a foreign country. It would have to be used for investment in the United States.
What will the guarantee for MSLP based on if it's not a personal guarantee?
And the lender at its discretion could make it a secured loan against company assets. And that it's at the discretion, the lender could ask for a personal guarantee, but it's not clear to us if that's going to be very common at all.
If you received a PPP, but the forgiveness hasn't been determined at the time of applying for the MSLP, does that need to go into your debt calculations for the MSLP?
We believe that is correct, because at the time of the application, that is considered debt.
Does your engagement work on success models?
Happy to discuss it does partially. Happy to discuss that offline, but I don't want to focus on that here.
For a priority loan, if I have 100K of existing debt and an EBITDA of 250, normally I could get 1.5 to 100K would be 1.4 million. But if I refi the 100K, would I be able to get it up to 1.5 million?
You would, but you'd still only have availability of 1.4 million because $100,000 of your 1.5 would go straight to the other lender.
Thoughts on tax pass through such a LLC? How do owners make monies above taxes?
Anything you make above taxes will be based on the baseline of what you earned in 2019.
How does the existing debt or line of credit impact the eligible 4 times EBITDA multiple?
And it gets subtracted from the 4 times, or it gets subtracted from the 6 times, depending which program you try to go for.
Okay, I have a few PPP questions.
Sure.
I pay condo association fees that include my utilities. Can the use of a utility portion of my condo fees as a loan forgiveness for the PPP?
I would think that would be acceptable.
Has the time period of payroll paid changes from 8 weeks to 24 weeks?
One bill passed the House last week, but nothing's passed the Senate. And so until they reach some agreement on something, there's really nothing to discuss.
And the same question, it's similar, has it been extended for 24 weeks instead of the 8? If I already have received the 8, is it possible to apply for the remaining 16?
And none of that is law yet. So at this time, you can't count on any of that. And I see some stuff in the chat box, and I don't know if you've already gone through that or not.
I did. It looks like there's a couple multiples, but it looks like we are all caught up, Ami.
Awesome. I hope this was helpful to everyone. Feel free to reach out if you have any specific questions. I know these are tough and difficult times, only gotten more complicated by what's happening in our country over the last few days. And we wish everyone God bless and Godspeed as you work through it. Take care now. Thank you. Bye-bye.
Thank you.